Welcome to another Quantum Traders video. In this video, we're going to look at the higher time frames to actually keep us in the correct direction when we trade. Now, I know some of you actually trade on the 1 minute chart, and I have nothing against that, but what you must do is have a healthy respect for the direction of the higher time frames, because that's the direction you should be trading. So I've gone now down onto the 1 hour chart, and the very least you should be doing is putting a trend line under a rising market like that, just to keep your mind focused upon the fact that you're in a rising market. Now, when you see pushes like this one here, where you get a dramatic push, that's telling you that this market is strong and that you really shouldn't try and fight the trend. Now, very important, the second thing is that you look for trading levels. So if I put a line on the high there, you can see at that point there and at this point here, these are the two highest points in gold. And at these points, yes, you would be careful, because it could be, doesn't mean it is going to, but it could be that at these points the markets might actually reverse. So I've got this little square which I'm using just to block out the week of data, because at this point here where you can see this lovely blue arrow, that hit resistance. But once you hit a resistance point, if you break through it with a strong candle like that, well, you've got two options. You've got the first option that it might come down, retest the resistance point and push back up, or as in the case of gold here, it just didn't bother slowing down, it just continued moving to the upside. So there's absolutely no sign whatsoever of a reversal in the gold market, and it's really important that you go with the trend. I know, because I've done it a lot, but don't do it, because it will eviscerate you. These trends are strong. Think of it like an ocean wave. You don't want to swim against a great big mound of water coming towards you. You want to go with the flow. And in the gold market, when you're seeing stuff like this, that's definitely going with the flow. Only buy. No one knows where the top in gold is. Everyone will tell you, oh, it could be this, it could be that, but no one knows. So until you see a significant reversal, do not go short the gold market. Now, if we'd started this week, and you can see where the week would have begun, because I've got the magenta line here at the top showing us where the start of the week was. What are we looking for in terms of a signal to trade using the system, the liquidity profit, the liquidity histogram, and also I've added in something which I think will keep a lot of you the right side of the market. This indicator at the bottom here is called a CCI, and it's just set to the standard default 14. Now, I know from last week and the previous week that I should only be buying gold. So let's have a look at the signals that you could have had. Well, as we come along here on Monday, we come to this point here, we can see the histogram is printing to the upside, so we know something's going to happen. We're not quite sure what. Could have been a reversal at that level, but we can see that the histogram prints higher and then suddenly drops, and we get a punch through the support and resistance area. We can see here on the CCI crossed to the upside above the 100, so that means we should definitely be going long. Why? Because the CCI has pushed through the 100, hasn't crossed down from the top as it did there, it's pushed up. So the momentum's up, the power's up, so we simply put a buy in at that area. And this is why the larger time frames are easy. Now, you could have just run that trade, just held it. So we go into Tuesday and we're doing absolutely nothing except looking for buy trades. So you can see the histogram here is very low, and we've got no liquidity coming in on the lows. So trading the hour chart on Tuesday would have been pretty boring. You would have been doing nothing. And you would say, well, would you have closed your trade up at this point here? And the answer is yes. Your buy trade from here could have been closed, because not here, but here, we actually go through the CCI, we go back down through the 100. So that could have been a profit taking area for you. We don't know that it just went sideways after that. It could have actually reversed and come back down to this level or bounce, whatever. But would you have made money if you had bought in here? And the answer is, let's have a quick pip pound if you've gone in from there to there. So that's 360 points, and you were in best bed for most of it, unless you were in Australia, in which case you would have been watching the chart. But on the next day, Wednesday, what are we doing? Well, the trend is still up, so we only want to buy. So what we're waiting for is we're looking for map candles which tell us liquidity is coming in. We're looking for the histogram to rise, and then we're looking for a drop. And you know, if you want a trigger, why not? The CCI is not a bad one to use. You could use the CCI cutting through the 100 here, and that's where it cuts through the 100. Histogram has dropped, that's where you buy, and you would have simply held the market all the way up until we start to get colored candles. The histogram prints highly and we get a cut through, so you might have closed at that point there. So let's have a pip count, 251 pips. Most of the time you were doing nothing. Now on Thursday you can just about see, let's blow that up, you can just about see the histogram, sorry, the map here, print some very, very slight colored candles. So let's have a look. Would we have actually been able to get into that move using, say, the CCI? So as the CCI goes through 100, which means it's strong, I say trade on momentum. So when the CCI cuts through 100, it's telling you that this market is strong. You've got the map candles, you've got the histogram. If they both agree in the direction, just go with it. Do not fight the trend. So there was no real buy signal on Thursday, nothing that I would have really wanted to take. That's too late in the day. That would have been a no-no for me. And then on Friday, well, we've got some interesting things. We've got the histogram printing very high. We've got the CCI going back down through 100, indicating weakness, but the market is still in an uptrend. So would I want to take that sell trade? And the answer is I wouldn't, because the market's going up. Do not fight the trend. In fact, if you had just bought gold on Monday, left it alone, you would have been up as of Friday night about 1,000 points. And that is why it sometimes pays not to trade the 1 minute chart where you're very busy, but to look at the hour chart, because it's much easier to trade. You can hold your trades, you can just let them run. Now, on Friday night, had you bought on Monday and had you seen this, you could think to yourself, maybe I will close that trade, because at that point there, the markets had a good old run, possibly some sort of retrace, possibly coming in. So you'd be thinking to yourself, I've made a good profit on the week. Now in this little section here, I just want to quickly cover the histogram and matching histogram levels, because matching histogram levels are an excellent way for you to identify swings as well. So if you had been sitting in this gold market on the 1 minute chart, you can see that we had this level up here, very high liquidity. So what we could do is we could literally run a line from here, and we can see then it prints a lower liquidity at that top here, so you get a divergence. And so we've now got two levels that we can plot on our chart. So all down here is not very easy to read, but as we hit this next high up here, we can see we get these two liquidity levels, this one here and this one here. So all of these levels that we've marked are important. So as this gold market descends down to this point here, what do we have? Well, we can see quite easily that the liquidity matches at this point here, and that tells you that the liquidity from that top is being absorbed here. Consequently, you should expect a turn, and if you had been using your CCI indicator, you would have waited for it to cross from minus whatever it was to minus 100, and you got your color candles, and you would have gone long, and you would have just held all the way. So using the histogram, you can also identify some incredibly good trading levels. We can see here as we come late into Friday, if I take this line off here, I just delete that one, and we come across from this level here, or even these high levels here, we can see that we've got almost matching liquidity at that point there. So you would definitely be closing at that point, especially if you were a scalper on a Friday night, and you would have had about 89, 90 points out of it. Well, if you like this video, please like and subscribe. I could do with the subscribe, so get your mates to like it as well. And if you've got any questions, then come to our Discord server. The link's going to be down below, and we can definitely help you improve your trading. Well, thanks for watching the video.